Welcome back to Financial Market Insights for Traders. I'm Sophia, and today we're diving into one of the most overlooked but incredibly powerful tools in technical analysis: pivot points. Whether you're trading Forex, stocks, or commodities, understanding price behavior at key levels is absolutely essential. Why? Because these are the moments where markets pause, reverse, or break out, and that's where the opportunities lie. In this episode, we're going to unpack pivot points, what they are, how they're calculated, and why so many traders rely on them to identify high probability trade setups. We'll also explore the different types of pivot points, how they're used in real world strategies, what common mistakes to avoid, and how to integrate them into your overall trading plan. So, if you're tired of chasing price and want to get better at anticipating where markets will turn, grab your notebook, because this episode is loaded with practical value. What are pivot points? Let's start at the top. What exactly are pivot points? Pivot points are a set of price levels calculated from the previous trading day's high, low, and close. They're forward-looking, meaning they give you levels to watch for the current or upcoming trading session. That makes them a bit different from indicators like moving averages or MACD, which are lagging indicators. Originally developed by floor traders back in the pre-digital era, pivot points gave those traders a quick, math-based way to anticipate support and resistance without needing a screen full of charts. Today, they're still just as useful, maybe even more so, because we're flooded with information. Having a clean, no-nonsense roadmap each day helps cut through the noise. Why should traders care about pivot points? Now, why do pivot points matter? First, they're predictive. Because they're based on prior data, you can calculate them before the market even opens. That gives you a clear structure to your trading plan from the get-go. Second, they're universal. You can apply pivot points to any liquid market: Forex, stocks, commodities, even crypto. Wherever price moves, pivot points work. Third, they're widely used. And that matters because the more traders watching the same levels, the more likely those levels are to become self-fulfilling. And finally, they work for all styles. Day traders use them on 5-minute charts, swing traders apply them to weekly setups, and long-term investors can use monthly pivots to guide positioning. How are pivot points calculated? So, how are these levels calculated? The main pivot point, or PP, is the average of the previous day's high, low, and close. PP equals high plus low plus close divided by 3. Then we calculate the support and resistance levels. R1 equals 2 times PP, low. S1 equals 2 times PP, high. R2 equals PP plus, high low. S2 equals PP, high low. R3 and S3 follow similar logic, but are rarely hit in normal market conditions. That gives you a full map: 1 central pivot, 3 support levels below, and 3 resistance levels above. These levels act as zones where traders anticipate price reactions, bounces, rejections, or breakouts. Types of pivot points. But standard pivots aren't the only game in town. There are several variations, each with its own twist. 1. Fibonacci pivot points. These apply Fibonacci retracement levels to the pivot structure. So instead of standard equal spacing, you're using levels like 38.2%, 61.8%, and so on, great for markets that respect Fibonacci behavior. 2. Camarilla pivot points. These are tighter and better suited for scalping or short-term trades. You'll see multiple close proximity support and resistance levels, which can be useful during consolidations or range-bound sessions. 3. Woody's pivot points. These put more weight on the closing price. The formula is slightly different, giving you levels that are more reactive to the most recent session's momentum. 4. DeMark pivot points. These work differently altogether, focusing more on price relationships and often used to spot breakouts rather than reversals. Which one should you use? Start with standard pivots and add others as you gain experience. The key is consistency. How traders use pivot points in real markets. So how do we actually use pivot points? First, as reversal zones. Let's say price is rising and hits R1, but stalls and starts to reverse. That's often a signal to short or take profits. The same goes for S1 as a potential bounce zone in a downtrend. Second, as trend confirmation. If price breaks above the pivot and holds, that's often interpreted as bullish bias for the day. A break below the pivot shifts bias bearish. Third, as breakout targets. Some traders use pivot points like Fibonacci extensions. If price breaks R1 with volume, R2 becomes the next target and vice versa. Strategies involving pivot points. Now, here's where it gets tactical. Intraday strategy. Let's say you're trading euro to US dollar on a 15-minute chart. Price opens above the pivot, consolidates, and then breaks R1. You enter long with a stop just below the pivot and target R2. This strategy works best during high volume sessions like the London or New York Open. Swing strategy. Weekly pivot points work great for swing traders. If a stock closes the week above the weekly pivot and retests it on Monday, that's a potential long setup with a target of R1 or higher. Common mistakes to avoid. Now, a few things to watch out for. Don't use pivot points in isolation. Combine them with trend indicators or candlestick confirmation. Don't assume price will always react. News, earnings, or unexpected volatility can override technical levels. Don't force trades at every pivot level. Some days, the market chops through them all. Be selective. Final thoughts. So, here's the takeaway. Pivot points give you structure. They tell you where the market might pause, reverse, or break out. They're simple, reliable, and used by traders all over the world. Start by adding daily pivot points to your charts. Then test them across different time frames. Look for confluence when a pivot aligns with a moving average, Fibonacci level, or trend line. That level becomes a hot zone. And if you're serious about mastering pivot point strategies, check out the trading tools over at crystalballmarkets.com. You'll get access to real-time pivot calculations, custom indicators, and a full suite of analytics that can help take your trading to the next level. I'm Sophia, and this has been another episode of Financial Market Insights for Traders. Thanks for listening, and as always, stay focused, stay informed, and trade smart.